You've worked hard for your money. Now it's time to make it work for you. In 2025, your first big investing choice is simple. Buy individual stocks or invest in mutual funds. Think of stocks as driving your own sports car. Full control, full responsibility. Mutual funds, that's the tour bus professional driver, less stress. This isn't just about money. It's about your personality, your time, and how hands-on you want to be. With more tools and options than ever, you need to understand what you're getting into. Don't be passive. This is your future. Be honest. Are you a research junkie, or do you want a set-it-and-forget-it approach? Your financial plan should fit your life, not the other way around. Let's break down your options so you can make a smart, confident choice. Ready? Let's get started. Stocks mean owning a slice of a company like Apple or Tesla. When the company wins, you win. But if it stumbles, your investment can tank sometimes to zero. In 2025, markets move fast. News tech, even a tweet can send stocks soaring or crashing. Stock investing is for those who love research, can stomach big swings, and only risk money they can afford to lose. It's not a hobby, it's a commitment. You'll need to read reports, follow trends, and stay cool when things get rough. And don't forget, taxes, profits are taxed, and how much depends on how long you hold. The thrill is real, but so is the risk. If you crave control and excitement, stocks might be your lane. But remember, you're the driver, mechanic, and navigator. Be smart, be prepared, and never bet more than you can lose. For most, this is the high adrenaline route. Know yourself before you hit the gas. Mutual funds are the tour bus. Your money joins thousands of others, managed by a pro. Instead of betting on one company, you own pieces of many, spreading out risk. This diversification is your safety net. If one company fails, others can keep you afloat. Mutual funds are built for busy lives. No need to be a market expert. You pay a small fee called an expense ratio for professional management. In 2025, fees are lower than ever, so more of your money works for you. Systematic investment plans, SIPs, let you invest automatically each month, building discipline and taking emotion out of the equation. Dollar cost averaging means you buy more when prices are low, less when high. Mutual funds suit almost everyone. Beginners, busy professionals, cautious savers, and long-term planners. You're not chasing daily wins, you're growing steadily with the market. For most, this is the smartest, simplest way to build wealth. Let the pros drive while you enjoy the ride. Stocks or mutual funds? The right choice depends on your timeline, risk tolerance, and interest. Short-term goals? Stocks are too risky. Long-term? You can handle more ups and downs. If big losses make you panic, mutual funds are your friend. Love digging into financials? Try stocks. If not, stick with funds. Most people do best with a mix. Put 80-90% in diversified mutual funds for stability and 10-20% in stocks for excitement. Start early, stay disciplined, and focus on your goals. There's no shame in letting pros handle the hard stuff. Build your foundation, then add a little thrill if you want. That's how you create the rich life you deserve. If you liked the video, click the like button and subscribe to this channel.